Okay guys, welcome back to another session of backtesting. Okay, I hope so you are like you can hear my voice and everything. Okay, so we have 8.58% of the profit. Our win rate is 35%. It went from 37% to 35%. We'll try to get it back again. Okay, and in this session I will not be speaking that much. Okay, so let's go on to analytics. Let's see. Okay, 858, 35, 8.58%, fine. We had a profit, then again loss, and then again loss. We'll try to book as much as good setups as we can. And in this session I might not speak, so if you have watched all the session, then obviously you will get the idea of what needs to be done. I was not able to take the session yesterday because of my illness, but yeah. Anyhow, I got to complete this challenge. Okay, so I think our bias should be bearish or bullish. Think about this. Sell side level taken, find sell side, sell side. This is way too much away. These sell side levels are way too much away. Okay, so this particular thing is formed to make somebody look, make people think that okay, the market is wanting to go down. I'll go on a 4 hour time frame. Okay. Now let me just delete unnecessary things. Okay, done. This high got taken, no need to put it again. This high as well, this high also got taken, no need to put it again. But you guys can see our thing is getting rejected from this particular order block. You guys can see the price got rejected from this order block and it went down. Then it again started to fall. This is like what you call it, some kind of retail stuff. So people in the retail market, retailers, they don't think that this particular pattern is for something when the price needs to break down. Okay, but this is not what actually happens. The price breaks down and it goes above. Got it? And this is the general retail stuff, and this particular stuff is also not useful. Let me just check. Level gap got inverted. Okay, let me just take out this red line. I think it's of no use. And also this, I don't know why I've drawn this. I'll just delete out unnecessary drawings. Okay. Yes, I think we are fine. So we have this upside movement, fine. So same like this, upside movement, broke down, upside movement, then broke down. It will again go back really higher because we have buy stop which are resting just above this point. I might have some low energy today, so please bear with it. Okay, so here we are. We broke down again. We start to go back up. We have these buy stops as well. That can be taken out, right? So these buy stops are our target. Okay, we'll look for some kind of entry to be formed. Okay, and now look into this particular thing. There's a fair value gap that has been created. We can like mark this fair value gap. So the fair value gap has been marked. Let's go on 1 hour time frame. Okay, is there any fair value? Yes, there is a fair value gap. You guys can see this. There's a fair value gap in here, but also there is a fair value gap in the upside direction as well. We want the price to be rejected from this point. Okay, I have like little confirmation whether the price wants to come back down to this level or not. So let me just mark these two fair value gaps which are important on a hourly time frame. Okay, and then again we have this fair value gap, and then let me just mark it as a fair value gap. Okay. So this is an order block. Taking an entry at this point is far much useful. Okay, I'll see if it can show us any kind of So here's the upside of the order block. Let me know. This is the upside of the order block. This is where I want the price to see some rejection. Got it? To the upside level. So this is what should happen. Exactly like this somewhere. Okay. Go down 15 minutes. Let's see if the market wants to show some kind of price movement in downward direction. Okay, and we have this particular thing, and we can anticipate this to be taken as well. Okay, got it. So I think it should just touch this fair value gap. Okay, it should be ran through and touch this fair value gap, and then the price should rally upward. Let's see if we can see any kind of change in the market structure before this happens. Okay, we can see a sell side liquidity that is formed. I want this sell side liquidity to be taken before the market wants to rally higher, and so this is sell side should be taken. Plus there is one more thing that should be done. So if you see the whole price movement, we can see this is particularly the point where the price order block is coming, plus equilibrium point is also there. So the price it should reverse from that point. So I am going to form my entry somewhere over at this point. Is there any order block we can see? Yes, on a smaller time frame we can see an order block at this point. Okay, now this one is an important order block for me. Now I have less confirmation that the price will reach back down to this particular fair value gap, and if the price is bullish it should respect this fair value gap and keep moving down. So I want something like this to be taken, like this. Yes, and I feel like there's a less confirmation about whether the price wants to go at that high level or not, but we'll see. Okay, you guys can see this particularly it touched that fair value gap. You guys can see, not fair value gap, this order block. Okay, this particular order block it has touched. Why have I drawn it so long? Okay, I hope we can now see the order log is right. This down close candle is an order log. Okay, and also there's a fair value gap. You guys can see there's a fair value gap, right? That has been created, and a price should bounce back from this fair value gap. Okay, so that is what I want. There is a fair value gap. You guys can see that, right? So instead of taking this higher time frame for fair value gap, let's now consider this lower time frame fair value gap. Okay, we are going shorter and shorter on a very small time frames, right? What the hell? I think it's fine now, right? Order block and plus fair value. So the fair value gap is in the order block, higher confirmation, sell side level is taken, again a higher confirmation. Let's see what the price wants to do, and once again let me just find the equilibrium point. Okay, I forgot. The equilibrium point is somewhere near to the middle of this thing, somewhere at this point. So somewhere at this point I want to see. Okay, anyways, the order lock has been touched. I will see for a reverse price structure to see what we can. Okay, now the time right now is 2:03. Can it show us any kind of moment? Okay, it is getting ran through. Okay, not a change in market structure, no change in market structure. The price is rallying, no change in market structure. Okay, again it went down. Okay, the price has touched this fair value gap. Fine. I think is now trying to respect this order lock. Okay, Wait, in the middle, yesterday itself, I found one order block in the middle of the price rally higher. We go, this is the down close candles on. Okay. I just want to see some kind of change in the market structure. Okay. Can I call it a change in the market structure? Think about this. Back into this area. Okay, this particular thing is not taken by this thing, is not taken by this thing. Less confirmation, the price just down, and it will be taken. Now there's a proper change in the structure of delivery, which I could see right now. The price could come back to this point. Is there any favor? Like, yes, I will take some trade over at this point. Okay. So let's take a trade over here. Put my stop loss at this point. What was the time right now? It's 13:11. Let the price come back. Oh wait, the price should come back. What is even trying to do? It's out of the London kill zone. I don't think I should take any entry. It's out of the London kill zone. Let it be. If it wants to go, let it go. See, following the rules, gives you some kind of fruits. On a shorter time frame, you guys can see there's a favor leg up that has been formed here, right? If the price is bearish, it should just retract this, come back, and then again shoot out for the buy side liquidities. That's it. This one, this one, this one, this one. Okay, fine. A good retracement back in the fair value gap. Let me delete this fair value gap. This is useless. Okay. It is trying to break that point. See, sell side levels are taken at this point. They have been swept, and the buy side liquidity has been built over at this point, and the highest liquidity has been built at this point, and also some at this point. So we can, if we can, increase our target, that will be very useful for us. Again, there's some equal lows that have been created. Let it take out. Okay, fine. Now they got taken. Let's see if it changes the market structure or not. Okay. Now I want the price to come back to some level, like okay, where it could come back. Think about this. If I go on a 3-minute time frame, this is where the change in the structure of delivery happened, right? And this is where I want the price to come back. And you can see one more thing. This is the sorry, this is a fair value gap, and erase it back. Here we are, and this is fair value gap which I marked. But I should come back to the high of this thing, or like in the fair value gap, and I could anticipate an entry, put my stop loss at this point. You can go long. Okay, and this low, fine. My target could be this particular high is much higher, but if it gets taken, then this definitely should get taken. Okay, but the low hanging fruit is this one. If I could take some average out, some partial out, then I would have taken my partials at this particular point of price. But let's see if the price wants to do this or not. So buy, I want to buy at limit, I want to do current balance, it's 0.25% of the current balance. Okay, let's just go on with the trade. No. Okay, anyway, trade has been missed. Let it be. The trade has been missed. Okay. Could we have taken a trade just the moment it inverts this way, like breaks this high? Yes, we could have, Okay, fine. We can just only see the price move to our levels. Okay. Now here we are. This buy stops got taken. This buy stop, but then the price rallied away. Fine. It's fine. Okay. Now is there anything else we could see? Because we were noticing some like uptrend. We were noticing some kind of uptrend, right? And the price should be shown to be broken down so that we can move higher. These are the liquidities that have been created. They can be taken down, right? Let's wait for the next day. It's Monday, right? Monday manipulation will happen to downside. Tuesday 12:30. Tuesday 17:30. The market do what it wants to. Hey, stop. The price. Find it. Oh, this is the point where we are. This low, and this lows. These lows are near, right? And I think these lows can be taken, right? So we can anticipate these lows 1, 2, 3. But there's one thing you guys can see that on a retail side thing, you guys can see there's a structure that is being formed, right? According to retail stuff. And according to this structure, when people think, okay, this particular market has fallen, the price will again rally upward in the upward direction. This is the moment where the trajectory of the path changes. Okay, now I will anticipate this low to be taken, but these lows are way too near, and this is also near. If I see any changes in the market structure deal with, then I will anticipate some kind of entry. Otherwise, I'll not do it. Okay, this low is taken. That's it. Fine, but this low is the nearest one. Next nearest, sorry. If the market takes out these lows, then it means it is validating this particular structure. Okay, so this, and then broke down like a trend line. Just a simple trend line thing. I don't want this to be done because it should not work. Buy side liquidity has been built. Buy side liquidity swept out. Wait, we could have taken some trade here, right? The low didn't get taken, became an equal low. time right now? 4:16. Okay, so it went back higher, got in this failure, get rejected from this order block. It again went down. Let's see if it wants to take out this low or not. Some sell side liquidity has been built there, built downwards, right? And I want the price to go in that direction. See, there's a liquidity that has been built. There's a fair value gap that has been touched, right? Okay, so this is the break in a structure of market delivery, right? And this is the order block which will keep the price lower. And I'll enter in this particular candle. So let's take an entry in the sell side direction. This is the thing. Yes. Entry at this low. We can take an option. Position, sell, no, yes, market, no, not market. Limit current balance 0.5, place trade. The trade got taken, right? Okay, we can take like these. So there's a inverted fair value gap, you guys can see. If you go on some like 3-minute time frame, you guys can see some fair value gap that has been inverted. And I want the price to come back to that point so that the fair value gap, because it has been inverted, it should go downwards, right? Because this is the liquidity which is most nearest, most equal liquidity. You guys can see that, right? Wait. Should I have combined this particular trades or not? If I combine that trade, I could anticipate some entry, right? So let me just see what kind of structure is being formed. Okay. 3-minute. Okay, here's a 3-minute chart. The price can come back to this. So you guys can see there's a fair value gap that has been inverted. And our inverted fair value gap can bounce back the price back to the direction. Okay, so the price should come back this particular level. I have this candle to be target, and we can take some entry like this, maybe like some entry over here, target this high and then target at this point. That's it. Somewhere at I should do again target. Got it. Okay, so finally let's see, go back 1 minute time frame. Okay, let's try to anticipate an entry. Here we can take an entry again. Okay, the stop loss at this high, right, and the target at this low. Can we just a little bit of price change, maybe like this is okay. Go on 3-minute. Where's the fair value gap? Here's a mid. I can actually anticipate to be taken at this point. Okay, okay, can't even see. Let me just hit right over. Okay, that is fine. To just go for higher risk reward things, that is fine. I wanna win. I'm gonna open the position. I want to do sell limit at this current balance. I want do not trade. See, this is the same trade for the day, so I'm not going to take a loss of $30. Okay, sorry, $40. This I'm going to take a loss of nearly 30. Okay, I'm gonna keep something off for this day. Not again. Wait, what is the time right now? 18:24. Okay. I guess that was 18:24 Tuesday, right? This is way too much irritating thing. Okay, fine. We are at the price, right? We might have missed our entry, right? Thing is that it's 1824. We are right at 1825. Okay, it is getting downwards. If it goes downward, right? This is the point where we rejected off. But actually, the point where we should reject from is this point. Okay, so let me just try to frame some kind of entry. See, if I'm framing my entry, this should be here, and my stop loss should be here, right? Somewhere at this point, yes. And that is it. My target should be at this point. Got it. So, point 2.6, 1 issue 2.6 trade. And because if I see on a 3-minute time frame, that is exactly point below, but the price doesn't get exactly at that point, so it can come back really at this thing. Okay. Okay, so here we are, and we can take a trade. We can open a position. We can open a position, sell, limit, current balance. We don't want to chase the price. Let's take a loss of 30.30%, not 30%, sorry. We don't want to blow our accounts. Okay, let it be there, let it be there, let it, yes, very good. Oh, fine, we took a loss, it's okay. Back to, we gained how much? We gained 55, we lost 32, done for the day. Okay, no, not a big deal. Okay, it might show rejection. No, it doesn't want to show any rejection. It took out lows. Okay, let me just recalculate. Okay. So buy side liquidity has been built. Buy side, buy side, buy side, buy side. People are thinking that the market will keep going up. It is just trying back to retrace the path. This is the moment we are wrong. And the price is going higher for these buy side liquidities. Okay, I guess so. Not guess, like I anticipate so. But why so? We could see, yeah. So here we are. We can see some kind of fair value gap that has been inverted. So this is the fair value gap that got inverted. I want the price to come back to that point to give us some kind of entry, right? And because this is it, so then we can let it be. La 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 la. The price even didn't even flinch to that point. Equal lows were there. This low got taken, then price rallied up higher. If I am going for the same trade for the same day, I should keep my risk the same way. Okay, not lose extra things. Anyways, it's 1930. The 1930 time has passed, so let's go for the next higher day. Okay. And nice, it has been building some sell side liquidity there, and some buy side liquidity has also been built. Wellness is till 30. Okay. 1830. Let's see what the price wants to do at that point. So price is generating both side of liquidities, right? Fine. Okay. Just delete these unnecessary drawings. Why have I even draw this fair value gap? This is of no use. Let's keep it out. This is of some use. Keep it here. Keep it here. According to whole price swing, we can anticipate the price. Okay. The low can be taken because of the price swing we are thinking of. So we go on 1 hour time frame, right? We go on. So yeah, at least we anticipate for the price, to take out these lows. So yes, we'll say I want the buy side liquidity to be taken, then the sell side liquidity to be taken as well, because the sell side liquidity is too much. These all are sell side liquidities. Okay. I can see more sell side liquidities than the buy side liquidities, but there is a trend line as well in here. Let's see what the price wants to do. If one of the liquidities get taken, let's anticipate for another kind of entry. Okay, where is it? Hey, not trade. I want to take any trade. Okay, buy side liquidity has been taken. Now, because the buy side liquidity has been taken, I anticipate people will think this particular downtrend as the thing. Okay, the price should shoot up. Okay, according to this, the price, okay, whatever it is, just delete this retail stuff. Buy side liquidity has been taken. There is much more to go because there is buy side liquidity resting over here at this point as well. But let's see if we can anticipate any reversal in the price or not. The market has been going up before the 5:30 p.m. has started. It means the price wants to do something in the downward direction. We can anticipate some kind of lows to be taken. But let it be. Let's see. Is there any something or not? Okay, some kind of price structure is there. Okay, we can do a small entry, right? No, can have entry. At least the prices swing in higher direction. Okay. The previous price swing should be somewhere over at this point. Price is down right now at that point. Okay, we can change in the structure deliveries here. We can put the stop loss at this point. It's a little higher, right? The limit current balances. Okay. Price could come back to this. The price can come back to this equilibrium level as well. I'll cancel trade at any time. Fuck it. You know why I didn't wait for this particular buy sell level to be taken? Because right now when I was doing what do you call it, when I was doing this market, present market, I saw this buy sell level didn't get taken, the price reversed, got it, okay, and took out the another sell liquidity. So it means just because there is a high doesn't mean it will get taken. The market needs to prepare itself to generate liquidity, and that is what we should wait for. Okay, 954, fine. Now let's see if the price wants to go a little higher or something else. What's the time right now? It's 1850. So what we made on last trade, 73. We can anticipate just a lower trade. Can we expect a continuation to the downside? What do you think, guys? Can we expect a continuation to the downside, because there are a lot of sell side liquidities which are present here? I want the price to come back to this particular point on a 3-minute time frame. This is an order block. This is change in structural degree. We could anticipate the some kind of sell side level that to be taken at this point, okay, and high to be at this thing, and the low to be at a high hanging fruit target. Okay. If the price comes back to that point, it's fine. Otherwise, I'll not take an entry. Sell limit, current balance 27, 25. I'll say $20. Nah, 15 is okay. Let's see if the price wants to go back to this. Also, I'll look if there is any kind of okay, fuck. It got taken directly. Was there a change in the market structure that I couldn't see at that point or not? The sell level taken, we can anticipate for the higher buy sell level. Okay, there's a manipulation to the upside, downside, sell side taken. Could we have manipulated anything in here or not? Here is a fair value gap that has been inverted now. Now, the simple change in the market structure, price went back to this order block, trial it higher, fine. That entry, because our greater electron liquidity was at this higher point. Okay, we'll keep this in the next time. Thursday. Am I doing okay? Somewhere, yes. So level gets taken, price raised back to the equilibrium. Somewhere near the equilibrium. Yes. Okay. Okay, change in the structure of delivery. The price reached at the point where there was a change in the structure of delivery, and then it rallied higher to take out these buy stops. Okay, let's see what is about to happen in the next time. Okay, so the price has built what again? It has not been taking out, buys are taken again. It is sweeping the buy side liquidity which people are trying to build. Okay, then it might be the reason that the price want to go higher, right? If we go on a 1 hour time frame, can we see some kind of structure? Yes, we could see some kind of buy side structure that could be formed, and these highs are like equal highs which can be taken, and there's a like good chance. Okay, there is some kind of buy sell liquid that is formed. Okay, let's anticipate for this sell side level to be taken, because this was a sweep. I will not believe on it. Okay, price went higher, back to my target, but it went little higher than this just to take it out. Yes, we have this sell side level taken a little bit. Okay, sell side level is taken. What do you think? This low will be taken or not? I'll just keep a price here just to have a mark. Okay. Lot of sell side liquidity is built here. That is also here. Can the price rally towards it or not? See what the market structure is showing me. So 35 sell side level has been swept, and the price wants to go lower. No. Could I have put any entry or not? I can take an entry. This is reversed. Okay. Buy side entry. This point fine to be taken as a target. It could, reverse at that point. So no. This C got rejected from when it means the price wants to go. I will not. I'll delete my limit order. That's it. Because this is not what I wanted price to do. 5 minutes, but the price is doing in a direction. This failure gap that has been reversed is changing. This is the change in structural delay where it got rejected from. I'm right now. So there's a failure gap that has been inverted. Let's have a focus on this one. Is there any order lock? Yes, there's. I should not take a trade because we are out of the London zone. So let it be. Buy side is there, sell side level liquidity is there. I want the sell side to be swept, and then the buy side should be there. Higher time frame fair value gap. Block. Okay, so it's 46.13. The price is rejecting below this particular order block. Okay, and the order block is trying to make the price keep the price below this point. Okay, it is trying to reject. Let's see what it wants to do. I have to wait. Now there is change in the structure of delivery, right? Has not reversed this delivery. Be taken out. Price liquidity is taken. I want the price to give me a reason to take out sell side liquidity. I want to look for sell side liquidity. That's it. Buy side is swept. Change in structure deleted. Fine. Is there? Limit current value. Shit. I think it is trying to build a sell side liquidity. That is the reason it has not taken out the liquidities yet, and I started right that direction. Oh, there's a fair gap that has been inverted. Fuck, I didn't see it. Price came back to that point for the higher direction. Fine, let's go for the next day. Next day is Friday, so I don't think much things will happen. Sorry. I'm going to take the last trade for the day and then I'll finish it up. Current balance. We can see a forever model. I want to make a sell side entry. I want to see the price, just flash downward in this direction. There is a lot of liquidity that is right now present over here. So you guys can see there's a liquidity in here, liquidity in here. Is there a fair value gap that has been inverted? Change in the structure of market delivery? I don't think so. I don't think so. There a change. Market delivery, I'll just say okay. This one taken out. This one change in the. Okay, we have a price. Okay, we can anticipate the price to rewind. What we see, even if I rewinded a price, but I'm not going to take an entry. I'll take my entry over at this point. Why? Because that is where I'll put it, my entry. Just because I remind, I should not put my entry there. At the low of this fair value gap, sorry, inverted fair value gap, high of this fair value gap, and the target below these equal lows. Okay, so let's see what kind of reaction. And now anticipate 41, right? Down this level, right? Okay, a lot of liquidity to be taken out. Okay. Let's see what kind of nature we could expect price to do. And we can open position. I'll just do sell limit, risk amount is fine, place trade. Let's see what the trade is going to pan out. Forever model works really well here. Like I'll just show you where did I learn this forever model. Okay, if I Justin Verlin, okay, there's a YouTube channel, okay, which the person I follow, this is really good YouTube channel. You guys can see is forever model. Okay, this is the model I was following, so you can check this video out. Okay, and it works really fine. Okay, but the fact is I shouldn't have pick at my point over here. I could have taken an entry back at that point. Let's see if the price wants to come back to that point so that I can anticipate an entry. but we already at sell. We did 1106. Fine. I'm not gonna be. See, these are all the liquid that should be stepped out. Then liquid, no, it should be coming here, right? Because there's a change in structured delivery. Okay, fine, no entry. So okay, done for the day. We are 1106. We are 11% up. Okay, and we are going to exit the session. Fine. Let's go to dashboard. Our win percent is back to 37%, 11%. We improved our analytics, right? Okay, 36.84%, better than the last thing. Okay, and we are taking now lesser trades, and we are only taking quality setups. We are up 11.06%, and fine. I really love it. Okay, so that is it, guys, I guess. And although our average RR is decreasing, I don't give a fuck. Okay, I need to be profitable, and I should win for most of the times. And yes, this particular forever model, I like it. That's it. So you guys can watch this video. Just because I am a YouTuber doesn't mean I am going to give this to myself. Okay, you guys watch this video. I think this video is useful. And shout out to Justin Berlin. Although my shout out doesn't matter, but it's fine. Okay, that is it, guys. Take care. See ya. Bye bye. Have a nice day. Keep studying. Keep backtesting. That's it. Bye.